Well, the thing is, after bankruptcy, you need a clear plan if you want to get back into the business game and get the cash you need to open a business, expand it, and make it profitable. How do you get a business loan after Chapter 7? Well, I'm spilling the beans in today's show. Listen in. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about how to get a business loan after Chapter 7. And I'm going to show you a proven method to get back on track, to get into the business game again. And you have to understand, though, that while a personal bankruptcy will remain on your credit report for 7 to 10 years and will make it more difficult to obtain credit, it is possible to get a small business loan after your bankruptcy. And the fact that the bankruptcy wiped out your unsecured debt and you cannot file for bankruptcy again for a certain number of years, lenders may consider you to be less of a credit risk than you might think. So this is something to really keep in mind. However, you should anticipate having to shop around for loans, explaining what caused you to file bankruptcy in the first place, and demonstrating that your finances have changed and that you are now a good credit risk. It's all about perception. It's all about projecting an air of confidence. It's all about showing the lender that you are a new person, you have a new financial situation, a new financial profile. So you can still qualify for business loans after bankruptcy. You just have to do a few things. You have to actually be more methodical, and I'm going to show you in today's show. And one thing I also want to say is that realistically, it will require you to put together a strategy and expend extra efforts. And it may take a while and involve a series of baby steps, but in time, it is possible to overcome the effects of bankruptcy on your financial prospects. A bankruptcy will stay on your credit history for 10 years in the case of Chapter 7 and 7 years in the case of Chapter 13. Also, you want to expect your score to plummet, and I really mean it, plummet, 130 to 240 points, depending on your credit score, according to a FICO scoring model. Nonetheless, you can take action to improve your chances of getting that business loan or find capital from alternative sources. So, I'm just trying to lay the foundation of today's conversation. Now let's talk about the concrete steps you can take to get approved for a business loan after Chapter 7. Step number 1, I want you to seek legal help before applying for a business loan. It's very important. You need to get free legal business advice. After bankruptcy, you need to have the strategy you need to get approved fast. And here are 5 awesome resources that provide free legal advice for business owners who have had Chapter 7, I would say, issues or processes. First, you have Upsolve. And with Upsolve, you can find a free legal aid to file for bankruptcy or actually start your life, your business life and personal life after bankruptcy. And we love this company, and they are free, and you just go on their website and just sign up and ask your questions, and you get some answers. The second institution we have found in our research is Legal Corp. And Legal Corp is kind of cool also. They provide free assistance in non-litigation business law matters to low-income owners of small businesses, small nonprofit organizations, and low-income innovators in the whole country. They actually are based in Minnesota, but they actually covers the whole country. Remember, the Legal Corp itself is a nonprofit organization, and their mission is to expand access to the legal system in the area of business law to many who otherwise will be left out. So this is a great company to reach out to. The third organization is the American Bar Association Free Legal Answers. Fantastic resource, folks. Fantastic. Of course, you need to sign up. And once you sign up, you need to see if you qualify. You ask a question. What will happen is that one of their volunteer attorneys will actually get back to you. You check your email, you see if the answers satisfy you, and you can ask a follow-up question. You also have lawhelp.org. This is also a great resource if you want to have a free business advice in terms of how to navigate the post-bankruptcy life, especially when it comes to getting a business loan. And last but not the least, you also have Legal Services Corporation, LSC. And here you find legal aid for people and entrepreneurs with low income. And other resources might be your state bar association, local law schools, the local chamber of commerce, the state economic development council, and the local economic development agencies. The bottom line here is that you need to actually explore every and any area where you can get free legal advice. It is important before you actually start looking for loans, because you want to actually structure everything like your business profile, your personal profile. You want to structure it very strongly before applying for a business loan. Step number 2, folks, you want to seek free professional business advice. So after seeking legal advice, you want to seek now free professional business advice. Why? You have had some a little situation, right? You file for bankruptcy, you're trying to get back into the game. You need to actually have experts tell you how to structure your business and personal profile. The lawyers will take care of the legal part. Now you need consultants, business consultants, to help you with the business aspect of things, and it's free. All right, it's free. So you have the U.S. Small Business Administration. If you go to the SBA.gov website, you have a lot of resources there. Remember that the SBA operates district offices in all 50 states. Their services and advice and guidance are free. And the SBA also provides funding for SCORE and small business development centers. Speaking of SCORE, this is our second resource. So you go to SCORE website. And remember, the cool thing here is that we're not speaking about young organizations here. SCORE has been around for 50 years, and they offer free business mentoring by volunteers with real-world business experience. And SCORE also provides free and low-cost educational programs for small business owners. The third institution, you have the Small Business Development Centers. This is a network of the SBDCs, and this is run by the SBA. So they will also offer free advisory services to aspiring entrepreneurs and small business owners, including people who have filed for bankruptcy. All right. You also want to pay attention to trade groups in your industry. There is a trade group or association for almost every kind of business, right? Whether you operate a brick and mortar fireplace store or create apps in your basement, many trade groups have free resources on their websites, ranging from informational articles to how-to guides to templates for commonly used documents. I want you to also check out a website called businessadvising.org. This is great. This is a nonprofit that provides free mentoring to small businesses through a network of volunteer advisors. Their business model or their operating model is kind of analogous to what SCORE does. And you can also think about your local public library. Who knows, right? This may sound strange, but your neighborhood library is chock full of useful resources for entrepreneurs. So practical business guides can take you through everything from writing a business plan to using social media for marketing. Step number 3, I want you to structure your business properly. And this is very important, folks. You have to understand, after filing for bankruptcy, you are a higher risk for a potential lender. But there are ways, legally, business-wise, to structure your application or to package your application so it becomes palatable to potential lenders. And how you do that? First, you need to think about the legal structure of your business. I want you to stay away from a sole proprietorship. When it comes to business structures, you have, of course, sole proprietorship, partnership, LLC, limited liability company, S corporation, and C corporation, among others. But those are the major ones. You want to really stay away from sole proprietorship, because if you're trying to get a business loan after Chapter 7, you want to segregate your personal finances from the business finances, from the business's finances. So it's recommended, and we recommend, at least based on our research, to choose either an LLC or a C corporation, depending upon your situation. After that, you want to get an EIN from the IRS. You go to irs.gov and you just type in EIN. This stands for Employer Identification Number. So you can get that very quickly within the same day if you apply it online. And you need to also think about other business tools. For example, you need to get a business bank account, a business credit card, if possible. If you can't get a business credit card, at least get a business bank account and a personal credit card. The bottom line here is that you need a business bank account. One thing you have to understand is that to choose a good bank account for your business, you want to actually choose a bank that is FDIC insured, because remember, not all bank accounts are created equal. If you want to build a positive banking relationship, you'll need to find a bank that has all the characteristics of what we call a good bank. So it has to be FDIC insured. It has to have low fees. You want to pick a bank that has reasonable fees for overdrafts, bounce checks, monthly maintenance surcharges, and ATM usage. Because you really want to minimize how much money you are spending after bankruptcy after bankruptcy, cash is tight, right? You want to save as much as possible. So yeah, you also want to think about customer service. This is very important. And keep in mind that some banks may refuse to open an account for you, especially a business bank account, if they see that on the personal side, you have had some issues, including bankruptcy. So banks need to actually check a few things. So they will check your bank history reports. So many banks report data about their relationship with you to data collection systems such as check systems. So if your bank account was closed due to unpaid overdrafts, bounce checks, or fraud, it is very likely that you have a negative mark on your bank history report. So think about that. And whatever happens, if a bank refuses to open an account for you, you are entitled to an explanation. You can also remove inaccurate information from your check systems file. And sometimes you get a second chance, because many banks have second chance programs where they allow a person with a troubled banking history to get an account. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. I'm still speaking to you today about how to get a business loan after Chapter 7. And step number 1, seek legal help before applying for a business loan. Number 2, you want to seek free professional business advice. Number 3, you want to structure your business properly. Number 4, you want to know lender requirements for Chapter 7 business loans, because lenders do have requirements. The requirements are actually, you have two types of requirements. So you have what they call the operational requirements, and then they have the loan types. And those requirements depend on the loan types. First, lenders want to see credit. So when a small business owner requests funding, lenders almost always check the owner's personal credit. So having a great personal credit score is essential. Obviously, if you have filed for bankruptcy, you don't have a good personal credit, and you probably don't even have a good business credit score. So that's out of the way here. But the lenders also want to see cash flow and income. They look at the debt to income ratio of a business or the founders when assessing its risk. So the higher a business's cash flow and income, the better the chances it has of getting a loan. They look at the age of the business. New businesses, as you can imagine, can have difficulty getting funding because most lenders only lend to businesses with a track record of at least 2 years. And the lenders will look at the current amount of debts. They will look at the collateral and the industry in which your business operates. Because again, some industries we really know that this economy works cyclically and systemically. So you have cyclically and systemically. So those two things make it very highly likely that if you are in an industry with higher risk of economic downturn, the lender is not going to approve your loan. That's just as simple as that. It's all about risk management. And what about the loan types you can qualify for if you're looking for a business loan after Chapter 7? Because a lot of people only think when they hear the terms business loans, they're thinking about term loans. Yes, term loans is one of it, is one of the loans that we're going to talk about in today's show. But you also have business lines of credit. You have equipment loans, invoice factoring loans, aka accounts receivable financing arrangements. You also have merchant cash advances. You have peer-to-peer loans. You have SBA-backed loans, those that are endorsed by the United States Small Business Administration. You have the term loans that I spoke about earlier. You have unsecured business loans, those that do not require collateral. And then you have working capital loans. Those are the loans that give you the funds to pay for daily operations, pay employees, and deal with temporary drops in profit. So if you are a post Chapter 7 entrepreneur and you are trying to get a business loan, you need to know which loan exactly you're looking for. Step number 5. I want you to be prepared to present a business plan. This is very important. Before you try to get credit for your business after Chapter 7, make sure you have a solid, organized business plan to present to potential lenders. The industry in which you are seeking a loan might also make a difference as to your success. I've already said that. And if you are seeking funds for a business with a high rate of failure, such as a restaurant, you want to prepare solid responses to likely questions. And when it comes to preparing a business plan, you have 3 options, only 3. DIY, so you can DIY it, you can outsource it, or you can use software for it. So if you have a knack for financial statements, business strategy, and pitching, go for it. Write your own business plan. But again, you want to have the plan reviewed by another party. You can outsource the writing of such a plan, right? You can go to sites like Fiverr, Upwork, or Freelancer, or you can even hire a local business consultant. Either way, please do not be stingy and go for freelancers who promise to write you a business plan for, say, $5, $10, or $25. You get what you pay for. So you want to spend wisely and seek quality first and foremost. And to get a good business plan, expect to spend somewhere from $300 to $3,000. So you want to invest in quality. And you can use software such as LivePlan, BizPlan, or Business Plan Pro. All right, so those are, we even have, we found other. So you have LivePlan. We're showing you the snapshot on the screen. You have LivePlan, you have BizPlan, you have Business Plan Pro, you have Enloop, and then you have Go Small Biz. So those are the top 5 business plan software tools that you can use, and they're pretty cool. And your business plan to be complete must have a few key parts. So you have the executive summary, the company description, the market analysis, the competitive analysis, the description of management and organization, the breakdown of your products and services, the marketing plan, the sales strategy, the request for funding, and the financial projections. You need to really understand, you need to explain why you need the money in the first place. That's in the request for funding. And you might also want to attach some financial and legal documents. So things like your driver's license, ID, business licenses, balance sheets, and bank statements, and also the articles of incorporation. So before applying for a business loan, your business must be incorporated as an S Corp, C Corp, or LLC, as I said. And in order to get approved, you must be registered as a for-profit business and bring proof of your incorporation. Step number 6, folks. So far, just kind of go back to where we are speaking today about how to get a business loan after Chapter 7. So step number 1, you want to seek legal help before applying for a business loan. Number 2, you want to seek free professional business advice. 3, you want to structure your business properly. 4, you want to know the lender requirements for Chapter 7 business loans. Number 5, you need to be prepared to present a business plan. Step number 6, you need to prepare factual explanations. What is that? You are allowed to attach a brief explanation to any item on your credit report. Therefore, if your financial troubles were caused by a major event such as a divorce, car accident, or catastrophic illness or injury, you can place a short statement on your credit report explaining what happened. Lenders may consider this information when determining whether you are eligible for a business loan. And it's also useful to create and print out a short statement explaining what caused the bankruptcy to show the lender that, you just didn't get there by yourself. Things happened, life happened, and you just had to go through stuff. Make sure you keep this statement brief, very important, precise, and concise. You want to leave out any emotion or negative statements. For example, don't hand the lender a page about how awful your former spouse was because he or she failed to provide child support payments. Instead, you want to make a simple statement about the fact and explain what the circumstances were and why they are different now. So you want to print out several copies of your statement and provide them to lenders with your application. Make sure you are prepared to articulate the highlights of the statement as well in case you are asked about it. And please don't lie, be honest. Number 7, you want to seek a qualified co-signer and or a co-borrower. If you want to get a business loan after Chapter 7 and you want to, let's say, boost your odds of approval, it's kind of cool to have a co-signer and or a co-borrower. The possibilities are different depending on the lender. So many lenders do not allow co-signers who are not part of the business. So you will have to look at the application for the loans you are interested in to see what the requirements are. And so for those who are not familiar, a co-signer is someone who agrees to pay the balance if the primary borrower defaults. Usually co-signers don't have I would say withdrawal privileges. This is very important to have in mind. And one thing you also need to understand here is that remember that as a co-signer, if you have a co-signer on the loan, that co-signer has responsibility. That co-signer has some kind of duty. So it's very important to understand that before you drag family members into your business ventures, if you want to drag them into the venture as a co-signer, they will bear responsibilities. Step number 8, folks. You want to consider online and alternative lenders. Very important. So we're going to show you very quickly a few lenders that you might be interested in, especially, and those lenders, we have vetted them. We have gone through their pros and cons. They're really good, and they would consider a business loan application after Chapter 7. The first one is Lendio. Lendio is great for loan variety. The pros and cons: you have a fast application, wide variety of funding and lenders, and personalized guidance and expertise. And the cons: high interest rates on some loans, and their reports of hard credit inquiries. And so Lendio is really a loan marketplace that will connect you with tons of lenders and loans, making it the first step in getting back in business, in getting back in the game after getting your business loan. We also have Fundbox. So Fundbox is actually great for bad credit and Chapter 7. The pros and cons: they have an automated application, low approval requirements, fast funding. And the cons: low maximum loan amounts and a higher APR. Then we have Street Shares. This is best for peer-to-peer lending. It's pretty cool. And they actually are very good, and they focus on people who have entrepreneurs who have had, I would say, credit issues in the past, for example. And we also have Ken Capital. So Ken Capital is kind of cool. Also, we have Ken Capital is best for merchant cash advances. So this is a good one. And just so you know, Ken Capital does have higher revenue requirements though. So, but if you're fine with the high rates and short repayment terms that come standard with MCAs, you can do worse than you cannot find worse than Ken Capital. And we love the fact that this is a great company that has they have received great reviews with customers and a good rating from the Triple B. And one thing you also need to understand here is that they are willing to actually fund you up to $1 million. Again, it depends on the solidity of your loan application, but they are willing to go as high as possible to kind of give you the cash that you need to move forward. Step number 9. Step number 9, you need to keep your debt down after bankruptcy. Folks, if you're trying to get a business loan after Chapter 7, it's very important to do things proactively. While you're seeking the funds to get back in the game, you still need to think about solidifying your personal credit and your business credit. So bankruptcy provides you with a financial fresh start. So make sure to take advantage of that and avoid any pitfalls that contributed to your financial troubles before bankruptcy. So you may increase your chances of getting a business loan if you can show the lender that you have kept your debt to a minimum after bankruptcy. So there is an important element here that is an important criterion I want you to pay attention to, and that's called DTI. So your debt to income ratio, your DTI ratio. Basically, this is the amount of debt you have divided by your income. So let's say if you have if your income is $100,000 a year, and you have right now the total of all the loans outstanding on your account, on your credit profile, amount to say $35,000, your DTI is 35%. So 35,000 divided by 100,000, that's 35%. That's great. A lot of lenders and experts actually are pretty comfortable with a DTI of 35%. So you want to maintain your DTI very low. Additionally, demonstrating financial responsibility may help convince your lender to offer you a loan. Be prepared though with evidence. You need to show evidence such as statements showing that you have consistently paid your mortgage or rent payments and car payments on time since the bankruptcy. It's all about, again, as I said earlier at the beginning of today's conversation, it's all about impression. You want to project an air of I would say assurance, of stability, of discipline when it comes to your finances, and that's what lenders want to see. And step number 10, folks. So number 9, you want to keep your debt down after bankruptcy. Step number 9, you need to demonstrate consistent income. So one of the most important factors a lender will consider is whether your income supports your ability to repay the loan you're seeking. So in order for the lender to approve your loan, you must have enough income to repay the loan, and your income must be consistent and unlikely to be reduced. In other words, again, they're looking for what? Stability. They're looking for cash flows. They're looking for liquidity. So those are the 10 steps that you need to actually implement if you're trying to get a business loan after Chapter 7. But I do have some bonus for you. I have additional tips for obtaining a small business loan after bankruptcy. One thing you have to understand is that all lenders have their own criteria by which they actually determine eligibility for loans. So your best bet is to find lenders that specialize in small business loans, and you need to ask them about their lending criteria. If you don't have any luck, please consider credit unions. Why not? Your local chamber of commerce may be able to suggest lenders that offer loans after bankruptcy. Bear in mind that because of your credit history, a lender will often charge you a higher interest rate and may require that you secure the loan with collateral, such as the equipment purchased with the loan funds or your own house or car. You also want to think about comparing lenders. This could be very helpful too. It's generally a great idea to compare lenders if you want to find the most competitive loan. So it's really important to look at some features. So you want to pay attention to interest. So you want to check whether the interest rate is fixed or variable and how competitive it is compared to other similar products. You have a lot of websites right now that allow you to compare loans from NAV to NerdWallet to Lendio. They all have embedded loan calculators on their website. You want to pay attention to the loan amount. So lenders often they will offer varying minimum and maximum loan amounts, but what you are offered ultimately depends on what you can afford to repay. You want to pay attention to the fees. There are different types of fees you can be charged, right? Ranging from establishment fees to monthly fees and early repayment fees. Some even have origination fees. So you want to find out what fees are associated with your loan before signing on the dotted line, and other features. So have a look at the different features of the offer, which you can find more about by reading loan reviews here, either on the page, on the signature page, or online. Okay, and If you want to get a business loan, you want to boost your chances of getting a loan post-bankruptcy, show that you have savings. Offer a deposit, in other words, a down payment. Apply for a lower amount, because applying for too much when you have bad credit or no credit or don't earn a high income can be a red flag to lenders and result in an automatic rejection, really, instead of an offer for a lower amount. So you really want to actually think about your how do I say this? Your expectations here. And you can also apply for a secure loan. Why not? Secure loans such as car loans are less risky for banks because they will be able to recoup their losses should you default. All right, folks, this is it for today's conversation. I was speaking to you about how to get a business loan after Chapter 7, and I gave you an overview of the situation, and then the 10 steps you need to think about. Seek legal help before applying for a business loan. Seek free professional business advice. You want to structure your business properly. You want to know lender requirements for Chapter 7 business loans. Be prepared to present a business plan. Prepare factual explanations. Seek a qualified co-signer and or co-borrower. Consider online and alternative lenders. Keep your debt down after bankruptcy. And demonstrate consistent income. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.